Hi, I'm Greg Hampshire, Vice President of Advantage Insurance Group, a family-owned and operated independent insurance agency here in central Pennsylvania. Today is the first in our video series titled Yakety Yak, Just Talk Back. We got a question from a viewer, and I thought it was a great one, so I wanted to take a break from our Insurance 101 videos and address it. I know it's a question a lot of you probably have right now. It's very timely, and it's one that needs to be answered. So today we're going to talk about price increases. Kim in Spring Grove wrote in a question about why her rates are going up. She hasn't had an accident in a number of years. Her house is getting older. Her autos are getting older. Why is she seeing price increases? I know a lot of us are right now. And today's video is going to just talk briefly about the general landscape of the insurance industry right now, and then maybe a few quick tips about how you could control those cost increases going forward. All right, so let's dig into this. So as Kim asked, why is her price going up? We have to understand a little bit about the insurance industry and how they operate. So an insurance company is just like any other business. They have to make money to survive, except they're extremely heavily regulated by the government. Anytime an insurance company wants to take rate increases or decreases, they have to get approved by the state. The state's kind of keeping an eye on them. And they're keeping an eye on them for a number of reasons. One, they don't want price gouging, which is understandable. But two, they also want to make sure that the insurance companies are in a good financial position so that if there should be a catastrophic loss in the state, those companies could handle those losses. And that's really viewed by the number of reserves that a company has on hand, as well as how they're operating. So you'll see a rating on insurance companies, A+, A++, A-. And really that is just a picture of health as determined by another company of how that insurance company is handling their finances, really. I mentioned reserves. That reserve is set aside, and it could be pretty substantial for some of these larger companies. But the reserve is there just in case of a catastrophic loss. God forbid a large storm comes through Pennsylvania and a large company has a ton of losses, they need to pay them out. That money is most typically going to come from a reserve if they're exceeding their operating costs for that year. So the state wants to make sure that the companies are very well positioned financially and will approve or decline rate increases if they don't make sense. So why would a company do a rate increase request of the state? If you imagine every business has operating costs, right? Insurance companies have them too, salaries, buildings, the everyday advertising that they have to do. And that fixed cost, all companies right now are seeing increases, mostly due to salary, just like every other business that we're seeing out there, okay? So that's the fixed cost component. That's going up for all insurance companies right now. The other component that most businesses don't have to deal with is claims, right? An insurance company has to be a pretty good forecaster of what they're going to pay out every year in claims. So if you take those fixed costs and the claims that insurance companies have to pay out as their figure of expenses for the year, most companies need to at least make 100% of those back in the premiums that they charge. So a real quick example. If a company takes in $1 million in premium, 200,000 of that is their fixed cost. They pay out $800,000 in claims that year. They have broke even for that year. That's 100%, 1-to-1 ratio, okay? What a lot of companies have been seeing over the last number of years with their increases in fixed costs is an increase in claims. And that percentage, that 100%, has actually gone above that in many cases. So companies are paying out more than they're taking in. And that's not good. They have to take those monies from somewhere, typically their reserves. And they don't want to dig into those too much because then the regulators get a little unhappy. The folks that give them ratings get a little unhappy. And, that's not a good position for anybody to be in, let alone an insurance company. So we've been seeing increases across the board, both for auto and home. Auto increases are coming from increases in labor rates on claims, as well as part cost increases. Time that the company has to pay out rental cars. There's nobody really that's out there fixing vehicles right now, and they're sitting in lots for a number of weeks or perhaps months. So, costs for claims have gone up on the auto side as well as the home. Material costs for repairs to homes have gone up, labor rates have gone up, and companies are seeing an increase in payouts across the board. Saw a figure in an article I read, over 20% in 2 years. And that's a pretty considerable increase for an industry that has seen relatively steady increases throughout their history. So that's kind of what you're seeing. A lot of companies have had to take rate increases in 2022, and we're seeing those increases again this year. A lot of requests coming from companies to do increases with the state, and the state's approving them because it makes sense. It's not like they're charging a lot more than what they're expecting to pay out. They're pretty in line with expectations. So some of the companies have not done a very good job of managing their claims. So I saw one company that you are well aware of, does a lot of advertising, at least in Pennsylvania, had to take over a 30% increase last year. And that's pretty considerable. So how can you stay away from rate increases like that? I mentioned claim frequency and claim costs going up. Look for a conservative insurer that is pretty picky about who they write. If you have a good driving record, reach out to your local agent and see if they write a conservative company. As long as you have a clean record, those conservative companies want you as a client, and they are trying to keep those costs down for you. So typically you're going to see lower costs because of that. On the home side, you're going to have conservative carriers as well. They're a little bit more picky about the types of homes that they write. But something that if you can't switch carriers, a real quick way to save some money on your policy right now is to increase your deductible. I mentioned increases in cost. It would have to be a really small claim. If your deductibles are only $500, it may cost $500 just for somebody to come out just to visit you to take a look at the damage. So increasing your deductibles, while it may be a little bit more out of pocket should you have a claim, it will save you in the long run. Year after year, you'd be saving on premium. And quite honestly, you shouldn't be filing small claims anyway. So you might as well save that money year after year. So just a couple quick tips. All right, thanks, Kim, for the question. Appreciate it. If you guys have any questions, feel free to post them down below or comments. I'm glad to read those as well. We appreciate your viewership. Make sure to check out our other videos if you have any questions on some of the basics on auto or home policies. All right, guys, take care.